The weekly breakdown, where I'm going to show the two trades that gave us a 2.5 risk to reward combined for this week. I also shared a Euro JPY trade, but this one ended up hitting take profit without tapping us into the trade. So for this video, I'm just going to keep it with NZD JPY and Australian dollar JPY. Starting off with Australian dollar JPY. Step 1 is to identify the direction of the market. If I look to my left, you can see we are in a bearish market structure. So anything in between this low and this high is still a bearish market structure. We have our pullback to this highest point of the retracement, followed by a break to create this new lower low, because this low closed below this previous lower low. So now we are expecting a pullback followed by a potential lower low to continue the bearish trend to the downside. If we identify our setup on the daily with the impulse and the retracement, we can see this would be our impulse all the way to the downside. If you look closely, you can see that there is a green candle in between all these red. So normally we would want our impulse to be all one color, but I still ended up taking this trade even though we had a very tiny green candle. After we identify our impulse with all these candles right here, breaking and closing below this previous lower low, we also have our retracement. Our retracement is minimum 2 daily candles and they are all the same color. So we had a valid retracement. We also had this impulse breaking and closing below of the previous low low, followed by the retracement to now potentially create the lower high. If we go on the weekly time frame, on the weekly we want to identify our support or resistance that could be of influence. So let me play it forward and give you guys a view of what the structure was looking like at the moment. Now I want to draw my support or resistance that could be of influence. This level is going to be my support. You can see to the left that it was resistance, support, and now price has broken below this level and is now using it as a resistance with this retest. So what I can expect is for price to come retest this level and find momentum to go back down to the downside. We go back to the daily, and on the daily we want to draw our fib in the opposite direction to measure the distance of the new impulse. So from the end of the retracement to the beginning, because we expect the new impulse to come at least to the negative 27 before retracing and creating a lower high. On the 4-hour, you can see on the daily this red candle has already formed, so I'm going to remove it. And on the 4-hour, we are going to wait for our break of this 61 level. Let's play it forward, and right here you can see we have our break. That means we can now place our order on the 61 level, stop loss on the 88, and take profit on the negative 27. We are now waiting until we get tapped into this trade. As you can see, we have now been tapped into this trade, and as soon as price breaks this 38 level, we can now move our stop loss to break even and it becomes a risk-free trade. Let's play it forward. I did end up closing this trade out on Friday at this candle. Let me place the vertical line. So I did end up closing right here. Play it forward. Price has broken 38, so we are now risk-free. And I'm just waiting until that candle has been hit. So this was where I ended up closing out my trade. It was a 1 to 16, 17, somewhere right here. So this was the breakdown on Australian JPY. The reason I closed my trade right here is because I don't hold over the weekend, and I close my trade before the end of the London session on Friday. So that will be this candle, or possibly could have been this next candle, but I ended up closing right here. Now we have NZD JPY. Let's remove these candles and give you the setup. So step one is identify the market structure. If we look to our left, you can see we are in a bearish market structure forming lower highs and lower lows. This would be the new lower low, lower high, lower low, lower high. This one closed below, so lower low, lower high, and this is the new lower low. So if I move this to the left, you can clearly see, even though it looks like a range, the price is moving between this price point and this low. So from left to right in a range, they still see prices forming lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. So we are still in a bearish market structure. Anything in between this low right here and anything in between this high is still in a bearish market structure. We have our impulse right here. Even though the impulse has one green candle, I still ended up taking this trade and considering this as my impulse because I was reading the news and they were saying that the JPY is going to be very strong while the NZD is going to be very weak. So even though we normally would want for our impulse to have all one color followed by retracement of all one color, I still ended up taking this trade. If we now look at our retracement, you can see this would be our retracement, at least 2 daily candles, and they are all one color. So now we have our impulse right here, followed by our retracement of all one color. We go to the weekly time frame. You can also see that price broke this range, closed below, followed by a retest, and is now looking to continue to the downside. On the weekly, we want to draw out our support or resistance that could be of influence. So let's play this one back and give you guys the view of what price was looking like. So you can clearly see that this level of support has turned into a level of resistance. It was a very strong level, resistance, 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 support, 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 support. Price ended up breaking, closing below, and is now retesting it, using it as resistance to continue the momentum to the downside. If we go back to the daily time frame, we can now draw our fib in the opposite direction to measure the distance of the new impulse. Normally you want to draw it from that high to this low, so from the end to the beginning, but in this case I ended up drawing it from the third candle, so from this high to this low. Normally you want to draw it from the highest point to the lowest, but I drew it from this candle to this candle. If we now go to the 4 hour, on the 4 hour you can see we have broken the 61 level and closed below. Also right here, so I'm going back to the daily, removing this candle because the move would already happened on the 4 hour. We are now waiting for the break of the 61 level. This is the first break, so now we can place our sell order on the 61, stop loss above the 88, take profit negative 27. So we have now been tapped into this trade and we're waiting for at least a break of the 38 level so we can move our stop loss to break even. We're still in this trade, and as you can see, the 38 level has been broken, so now our stop loss goes to break even. Let me mark my Friday almost London session close candle with this vertical line, this one right here. So we're still in this trade, and I ended up closing somewhere around here for a 1.5 risk to reward. So it was somewhere around here. I ended up closing my trade. So a combine of 1.5 plus a 1.17 was the profit for this week. Appreciate y'all for staying with me, and I'll see y'all in the next breakdown. Peace.